The world of tech is abuzz with the latest news from the earnings season, and it's all about AI. The big players Alphabet, Meta, Microsoft, and Amazon are pouring billions into artificial intelligence, but is everyone reaping the rewards? These tech giants have set their sights on the future, with increased investments in AI infrastructure. They collectively project a staggering $380 billion expenditure this year, a number that dwarfs even the ambitious plans of OpenAI. But here's where it gets controversial. Some observers are questioning if this spending spree is sustainable, and whether it's creating a bubble. Let's dive into how these companies fared during earnings season, and what it means for their AI ambitions. Amazon and Alphabet. Leading the pack. Amazon and Alphabet, the parent company of Google, have investors smiling. Amazon's stock soared after beating earnings and revenue estimates, and the company raised its capex forecast to a whopping $125 billion for the year. Alphabet, too, impressed investors with an earnings beat and a boosted capex forecast of $91 to $93 billion, up from $75 to $85 billion previously. Microsoft and Meta. A different story. However, not all companies shared the same success story. Microsoft shares took a hit, despite exceeding revenue estimates, largely due to CFO Amy Hood's announcement of accelerated capex growth in fiscal 2026, indicating even more spending to come. Meta's stock suffered an even bigger blow, dropping 11% on Thursday, its steepest fall in 3 years. Despite strong results, the company narrowed its capex guidance to $70 to $72 billion, leaving investors uncertain about the future. Divergent market reactions. The varying market responses to these tech giants' AI investments highlight a key difference. Amazon, Microsoft, and Google's AI investments directly bolster their cloud infrastructure businesses, a clear revenue generator. Meta, on the other hand, lacks a cloud service and a transparent revenue model tied to its AI investments. The company claims its AI benefits its core digital ads business, but analysts are skeptical. Oppenheimer analysts downgraded Meta's stock, citing an unknown revenue opportunity in Meta's Superintelligence initiative. They believe investors will struggle with the balance between aggressive revenue growth and high spending. Meta CEO Mark Zuckerberg announced the creation of Superintelligence Labs, led by high-profile hires like Alexander Wang and Nat Friedman. However, even with these big names, analysts remain cautious, especially about the endless spending forecasts. Key takeaways. Major tech firms are projected to spend over $380 billion on AI this year. Market reactions vary, with Amazon and Alphabet gaining, while Meta and Microsoft face declines. Meta's lack of a clear revenue model for its AI investments raises long-term viability concerns. So what do you think? Is the AI spending spree a wise investment or a potential bubble waiting to burst? Share your thoughts in the comments.